The U.S. economy is showing signs of weakness, but recession fears are not confirmed. What does the Chicago Fed president say about your financial future right now? Austan Goolsbee, president and CEO of the Federal Reserve Bank of Chicago, recently highlighted some economic weakness in the U.S. However, he is clear that this does not necessarily mean a recession is imminent. His cautious outlook reflects ongoing challenges but avoids predicting a full downturn. This nuanced view is important as it shapes expectations for markets and policy decisions. Goolsbee specifically points to the war in Iran as a major factor causing an energy shock. This shock threatens to reignite inflation pressures, complicating the Federal Reserve's efforts to stabilize prices. As a result, the prospect of interest rate cuts is much less optimistic now. This situation stresses how geopolitical events can directly influence economic policy and market reactions. In a WJR 760 AM radio interview, Goolsbee emphasized the lack of clarity among Fed officials. This uncertainty fuels a contentious debate regarding the timing and scale of interest rate adjustments. Financial markets are watching closely, betting on future moves, but the Fed's internal divisions reflect the difficulty of balancing inflation control without triggering a recession. Speaking in Detroit, Goolsbee stressed that achieving the Fed's goal of reducing inflation without sparking a recession is uncommon. His insight draws from deep experience, including his prior role chairing the Council of Economic Advisors. This underscores the delicate path the economy faces, as policymakers try to thread the needle between growth and price stability. Market participants are adjusting their expectations in response to Goolsbee's warnings. The combination of inflation threats and geopolitical uncertainty has led investors to predict a more cautious Fed stance. This means interest rates are likely to remain higher for longer than previously anticipated, affecting borrowing costs and investment decisions across the economy. What this means for you is that while the economy is slowing, a recession isn't guaranteed yet. Inflation risks and energy shocks could keep costs high longer, impacting your spending and borrowing. Stay informed, plan carefully, and subscribe for the latest updates on how these developments affect your finances.